Good morning, good afternoon, and welcome to this week's Qredo Spotlight. I'm Josh Goodbody from Team Qredo, and I'm super pleased to be joined this week by Ulla Rone from our friends and investors over at Deribit. Ulla, a massive welcome. How are you?
Hi, Josh. It's really nice to talk to you, and we're very excited to also discuss Qredo because we've been a bit of fans of yours. And we are very excited to move this project forward and talk more about this.
Awesome. Well, we're really glad you can join us to talk a little bit more about what we're doing, what you're doing, and maybe what we're doing together. Why don't you, before we kick off, Ulla, why don't you just tell us a little bit about yourself? Tell us, how you got into crypto and what you do at Deribit.
Yeah, I'm Ulla. I do business development and strategic partnerships at Deribit, and I've been with the company for now nearly 3 years. So when I graduated my finance program, of course, at that time, nobody was really that much into crypto. It was mostly crypto only game. And I started working for a fund, and turned out that one of my bosses was also investor in Deribit, and he said, "Oh, why don't you try this out? They're looking for their employees, and they're looking for somebody who understands finance, is interested in crypto." And I gave it a shot, and here I am, and I couldn't be happier to be working in crypto space today.
That's awesome. So that's 3 years then at Deribit, and Deribit itself, if I recall correctly, 2016, is that when it was founded?
2016 was when the platform was first launched, but it was early days, and it was first developed specifically as an options trading platform. So in 2016, if we look at how the trading of crypto has evolved, it first was purely spot trading. Then it slowly started shifting into futures, perpetuals, and actually only now options are really taking over because, as I mentioned before, those who were the first holders of crypto not necessarily didn't have the financial background. So they went on with the markets, and they started trading actually with the growth and involvement of the markets themselves.
Yeah, it's fascinating because Deribit came to the space with this options product first, and it was almost a little bit like the crypto space wasn't ready for options at that moment. People were just getting to grips with building, strategies for their algorithmic trading in the spot markets. But you guys came along with this options product, and how did that process go when you were speaking to the community and saying, "Hey, we've actually built this pretty cool, sophisticated options platform"? What was the reception like at that point?
I think at that point, John used to be an options trader himself. So he was a huge fan of options, and he thought, oh, if this thing is to take off the crypto space itself, what they need is options. So, but the traders themselves didn't know at that time that the options is what they will need. So it took a little bit of time. We also offer perpetual future products. So we kind of were following the train of what was happening at that time in the space. But in the meantime, we were very focused on the product. So we always had this goal of developing a proper infrastructure and system that can handle all of these trades. And that's why we also was a little behind with other platforms that were focusing specifically on retail traders. But we always knew that at the end, everyone will start to trade options because they provide much greater flexibility. And if we look at traditional markets, options are traded equally as futures. And also now we see that there's more traders entering from traditional space, and options are their preferred instrument to trade. And that's why we are currently the leading options platform with 90% of the total volume traded specifically on Deribit.
So 90% of the market in options right now is currently traded on Deribit?
Yes, it varies per day, but in general, approximately 90% volume and 90% of open interest in both BTC and Ethereum options is on Deribit.
Brilliant. And do you see the shift in the way people are trading from an on-platform, on-exchange model? Is there any request to kind of bring that into the OTC space so people can submit or write their own options contracts outside of the exchange environment? Have you seen that kind of progress over time at all?
I think what we also have seen mostly is increased demand for block trades because professionals, they want to trade larger volumes, they want to have multi-leg strategies executed. And that's why we are partnering with Paradigm, that is an RFQ solution. And yeah, that's why we see the block trades have exploded. Now 20% of our total options volume is in block trades. So we see that they are executed off books, but through the exchange.
Brilliant, brilliant. Yeah, I mean that's very much I would expect to be a sign of the infrastructure being built around Deribit that permits people to submit these block trades via this messaging system that you mentioned, Paradigm. So it's great to hear that that's growing from strength to strength. But maybe changing gears for a second, let's talk about us. The seed funding announcement went public recently for Qredo, which was very exciting. The wrapper was pulled off. We can talk about what we're doing finally. There's a huge amount that we've been working on as a team recently. And we were, as you'd expect, we were so chuffed to have Deribit back us and be one of our key strategic investors. If I can ask you, what, from Deribit's perspective, made Qredo worth investing in?
So one of our strategies, as I mentioned before, was to create an offering that's suitable for a professional trader. And we see a shift in our customer base. So it used to be crypto native traders and more trading companies, algorithmic trading teams. Now we see more funds entering the space. And there is a difference in how these professional traders trade. So for example, HFTs will have less balance, then less collateral needed, more frequency of the trades, while traditional funds will often have a much higher balance and they will have longer market exposure due to open positions. And also, while HFTs and like all the trading, they would be trading mostly on their own account. Funds of funds will be using their client assets. So they need something that ensures them that their assets are securely stored. And the best case of scenario is that the assets never move. We have always been aiming for an extremely rapid collateral movement. So that would be the first stage of how the custody was built, so that collateral can be moved in off-exchange environment. However, Qredo provides the same, but with an escrow account. The assets would never have to be moved, which is a huge bonus, especially considering that oftentimes these funds will need to have specific governance mechanisms of how transactions get signed, and due to MPC flexibility, they can ensure that. So in this case, we even remove transaction times as such. We ensure the highest security because of the multiple ways they can manage their own custody, add multiple custodians, multiple asset managers, and we get the best as we don't have to rely on a transaction getting signed after the settlement and then taking place on chain. We can just sweep it. So it's a win-win for all parties. So that's why we were very eager to integrate with Qredo and also find it worth investing.
Brilliant. Yeah, I mean, it's really interesting to some of the points that you've just mentioned there, where when you step back and you look at the crypto space, exchanges tend to have evolved to do everything, right? They are the marketplace. In some cases, the smaller exchanges are their own liquidity provider. They're also a custodian. They're also a clearer. Now, I think as the space emerges and kind of grows to the next layer of participants, as you mentioned, funds of funds, fiduciaries, the importance to have these layers of infrastructure starts to become, not a nice to have, it starts to become a must have. So you've been seeing, from what you're saying, an increased influx of users that are very different, and they have different requirements to the early crypto hedge funds back in 2019, 2018 even, those crypto hedge funds that really could do what they want with their own money. This is a different ball game. So this sounds like an infrastructure focus from your perspective. You see this as part of your potential future architecture and infrastructure to really allow the next wave of users, whether they're corporate or institutional, get involved with Deribit, but do it in a way that they're used to accessing the markets.
Yeah, exactly. And I think one of the biggest advantages of solutions like this is that there's no trust needed. We like to say that we are one of the most trusted exchanges, and we really see that also by the balances and how it's growing and how our users have trusted their coins with us. But at the same time, we don't need there to be trust. With this solution, we can completely eliminate it. And I think that's a great advantage to have, especially for new parties that are entering crypto space and know nothing about it. They just see, oh, this is this exchange. They have one of the highest volumes in the market space. We want to use the opportunity and trade there. But how will they convince their clients that they know nothing about crypto space, that that's where they can store their assets? If they use a fully self-custody solution, which means all of their client requirements, they don't need to trust this, and they can benefit from the highest liquidity in the market and option space while keeping their assets in full self-custody.
Yeah, yeah.
Their choice.
Yeah, I mean, it's been really interesting coming from the exchange space, and that's my background, coming into the, I guess, the other side, the infrastructure space, the technology side, and seeing how people have built custody for this space. And what I have come away with after looking at all of this is that custody's been built as an industry as another single point of failure, which for me is very counterintuitive for blockchain. You know, we've got this technology that breaks silos down and allows you to, you know, do these cross-chain, these very innovative, you know, capital efficient methodologies using blockchain, but we've built these big silos of assets that don't talk to each other, that don't interact. And for me, custody has always been a very odd concept, because it's got to be super secure and, you know, impenetrable. But at the same time, there's a cost of custody. There's a cost of capital in committing it into this pot that doesn't move. So we see ourselves as kind of the next evolution of custody. Do you, from an exchange perspective, do you see both as an exchange as well as from your users, the fact that, you know, people's assets should be much more fluid and much more kind of interoperable as opposed to siloed in all these different locations?
Definitely, because that would significantly improve collateral efficiency. If multiple market makers and also funds currently we see, depending from their strategy, can trade 4 to 10 to 15 different markets at the same time. So it's, especially when the markets are volatile, they need to have the flexibility to swiftly move assets between these accounts on various exchanges. Currently on chain, it's almost impossible to do. We see in the latest market correction, due to higher leverage, the price fell significantly, and even the slight less leverage, if it wasn't properly managed, would already endanger their whole account. So therefore, they needed to top the collaterals rapidly and move assets. And in most cases, I think at that time, it took 6 hours to do one BTC transaction on chain. So it's impossible. And however, if they can have all of these exchanges, or at least some of them, on one solution, it removes the problem completely. And I think the whole industry will benefit from it, because it would increase the trading volumes for all, because that would increase the efficiency of the traders rather than increase the competition among the exchanges.
Yeah, absolutely. And I think that I call it the flash crash, but maybe that's a bit dramatic. But that crash that we saw stressed every single layer one. So whether it was Ethereum, Bitcoin, even Binance Smart Chain had transactions queued up. So we saw the inherent problems that come with some of the scalability issues on layer one solutions. And so this is actually one of the areas that we had the most interesting conversations with our investors around layer two. And the frequent question was, well, you've got this decentralized MPC secured custodial environment. You've linked it with a layer two. What's the exact rationale for that? And, you know, simply put, it was securing assets in one place via the beauty of multi-party computation. So you eliminate private key risk as far as you can. But when you pair that with a layer two, suddenly you realize you don't have to move all your layer one assets around. You can actually settle transactions atomically and instantly via the layer two solution. So for us, we were surprised how much focus there was on the layer two elements of what we've built. But actually we see that as the key enabler for the overall Qredo protocol. It's the kind of linkage that brings everybody together and allows things to get done in a super quick, super secure and scalable way. So layer twos now have got on the radar of exchanges. So as you as an exchange have been going out and looking at, you know, what layer twos can do for you and for your clients, what have you been kind of looking for as layer two qualities?
I think especially when we looked at Qredo, we really appreciated the way it put together best of the industry together in a one high quality solution, because we've been talking to multiple custodians, and in the past 2 years, from very few, now there's hundreds of them out there. And it's funny to think about crypto industry as conservative, but crypto industry, and if we look from exchange perspectives, is relatively conservative when we look at new technology coming in. Multisig is not so flexible, quite slow. It's very hard to scale and make it efficient for the particular purpose of like moving assets fast. So MPC here comes in. However, the issue with MPC, it hasn't been tested by time. So when oftentimes we speak with clients, they're like, oh yeah, it's cool. We love the technology, but it's been around only for a few years. And yes, we hear, oh, but it was there like already 20 years ago, but not in this use case. When we look at a lot of companies, they say, oh, we've built this amazing proprietary solution, but how we can audit it, how we can know that is as safe and secure. Again, once it's kind of like a black box, we cannot check. It's very hard for us to understand. Qredo, with the second layer of solution, what you did was that you also combined the technology and algorithms for signing that hasn't been necessarily used and cannot be used on chain, but has had this test of time. And that's how also enabled more secure and rapid transactions, because also MPC, once you start to mess with it, it can actually become slower even than multisig. So that's what also a lot of times we don't see talking in the industry, because everyone knows MPC is this new cool thing, but oftentimes it becomes a marketing keyword and we don't look what's behind it. So I think the solution and the way of implementation, what really sold us the Qredo solution.
Awesome. Yeah, I think you're so right when you say that MPC is used as this buzzword. Like lots of projects throw MPC out there. And it's surprisingly simple to incorporate MPC in a very small element of what you're doing. But the problem is, if you're not decentralizing your multi-party computation, that's another single source of failure. Projects use MPC in this black box environment where you don't really know how they're using their MPC. You can't see the inner workings of that. It's not connected to any other, for example, layer two, let alone layer one, but layer two solution. And so how do you really audit the veracity or the scalability of that MPC solution? Well, you can't. So that's, I think, one of the areas that Qredo's tried to solve, which is really making it easy to understand by making it publicly verifiable and almost as trustless as possible. I think one of the challenges that we face is talking about this with people. It's so new, as you say. MPC in itself in crypto is new, but then when you decentralize MPC and you decentralize the overall custodial ecosystem that people are putting their assets into, and you say, well, you can do all this cool stuff like make transactions, for example, provide liquidity to certain venues, but you're not moving your assets. There's a big educational process behind that. So for you guys as an exchange, what I've always been really impressed by is the quality of your thought leadership. You're always putting these really high quality articles out there. Do you think that educational piece for an exchange like yourselves is going to be continuing to be a focus? Do you see that as an area that you want to continue contributing to?
Definitely, because we believe that an educated trader is a long-lasting trader. There is no use of a trader that gets liquidated in one go and never returns. So that's why that's why you should be a trader, not a gambler. And that's why we like to educate our traders. We like to let them know what's happening in the industry. We have, as you mentioned, education articles, but they cover wide spectrum of things, not only trading, not only the centralized exchanges and trading itself and custody. We also cover what's happening in DeFi space. We like to have a view on for our traders to have a view on all the aspects that are happening in the space and how they can benefit from it.
Yeah, absolutely. It's so important. It's so important because, as you say, giving people the tools they need to be able to educate themselves to participate in the crypto market in a safe way is really in our view, the name of the game. So it's great to see you guys continue pioneering that. So let's focus even more on you guys. Your business is booming. The crypto markets are booming at this moment in time. What are the kind of things you're going to be focusing on over the next 6 months? Where's Deribit going?
We're very excited because in the next 6 months, we have a lot of new things coming out. In the past 12 months, we were very much focused on scaling and building out our exchange even further, because that's the smoothness and the quality of trading has always been our main goal. And as we saw in the last market crash, systems work perfectly, no downtimes. And it was the first time when, even though market is crashing, our clients were very satisfied with us. So we were very pleased with that. But now we have always had more time to develop more tools and more interesting things for our traders. We will have USDT products coming out soon, new user interface that's been a long time coming, but it's finally nearly done and finished and ready to go. New partner integrations, of course, Qredo custody integration coming out soon. So new order types, a lot of new things that have finally seen the day of light. So we're very happy to push all of this out and provide our clients what they've been waiting for a while.
Well, a hell of a lot planned. That sounds very exciting, and I think kudos to you guys for the system uptime during these crazy market movements. It's funny that it's almost a given at this moment in time that when the market goes mad, most of the large exchanges will suffer from some kind of outage. It's almost this arms race of scaling your systems, but you guys held firm and stayed up. So I'm sure you had some collective pat on the backs internally and lots of praise from your clients. So that's very cool.
Yeah, especially because we have our options market. So we have multiple expiries, multiple strikes. It can be up to 4,000 order books that market makers need to update with every single price move. So because of that, the technology needs to be extremely robust and the latency needs to be top of the industry. And that's what we've been scaling and that's what we've been delivering. So the fact that markets held strong and there was no complaints, and especially also from options traders, is the highest achievement we could have. So we are very happy about that.
Yeah, great. And so you guys hold a really unique place in the industry. What would you say makes Deribit unique?
I think it has always been the focus on product and specifically tech and more professional users, because we provide tools that others don't. We have portfolio margining, market maker protection, which also increases the quality of our markets. Another thing is product options. We are building on that. We just recently launched DVOL, our volatility index, and we're very eager to launch volatility futures soon. So I think it's the products, the focus on the professional user needs, also now custodian offering. So altogether, it makes very unique in the space as we try to combine all the aspects that a professional, semi-professional trader may want to have, or they've used to in traditional space. And we see that still there's quite a large gap from what crypto exchanges offer and what traditional space offers. But obviously, because we're operating 24/7 and the industry is so new and product is so unique, there's still a lot of challenges, but we're always striving to deliver the experience.
Yeah.
HFTs, algo, quant funds are used in traditional space.
Yeah, and they're certainly not quiet customers, put it that way. They're very vocal with their requirements. So I'm sure you get a lot of requests and UI requests coming in all the time. So let's usually what we try and do, let's end on a future-looking, forward-looking note. Do you see anything unique, positive, or negative that might impact the CeFi or the DeFi space over the next 6 months? The frequent answer to that is Coinbase. So I'm not going to let you say Coinbase listing because it's happened and Coinbase's future earnings report. That's off the table. What other things do you think, positive or negative, might impact the space?
I think in general, the understanding of crypto space has grown so much. finally, my parents know what I'm doing. So that's Coinbase listing gave me at least that. And we see that there's more traditional funds entering the space, but also more sophisticated retail coming into the space. And what we are very eager about is specifically the growth of options markets, because in a year, we have increased our volumes from approximately 200 million notional traded a day to more than 1 billion. So, and we expect this to grow even further and markets to become more efficient, more market participants, more crypto adoption across the globe. So I think in 3 years, we've seen growth when everyone was discussing crypto as a pyramid scheme. And now top investment funds, hedge funds, revealing their crypto investments and exposure to crypto space. So I think it's very, very exciting time to be in crypto. Well, no time is ever not exciting in crypto, but especially now, I think the industry is fastly maturing, and I think there's more exciting things to come. With crypto, you never know.
You never know. You know, a month in crypto is 6 months in other markets. So you're absolutely right there. So Ulla, thank you so much for joining us today. We've run out of time, but we would love to have you back on Qredo Spotlights at some point in the near future. You've got a lot planned, and we want to get you back on to report back on some of your exciting developments. So thank you again, and we'll speak to you very soon. Thank you.
Yeah, thank you.